Welcome to ETF Battles. I'm Ron DeLegge. This is a program that is the antithesis of a judgment-free zone. Why? Because we deliberate and judge. We deliberate and judge. And when we're all done, we deliberate and judge just a little bit more. Yes, it's a hostile work environment. I get it. But if it helps to make us better, more informed investors, who really cares? Today's ETF battles between two ETFs that track U.S. small cap stocks. We've got the iShares S&P Small Cap 600 ETF, that's ticker symbol IJR, versus the iShares Russell 2000 ETF, that's ticker IWM. Now, the definition of small cap stocks can vary, but generally speaking, we're talking about companies with a market size between 500 million up to 5 billion. Another way to think about today's tussle between IJR and IWM is a face-off between two little sisters fighting for attention on their Instagram accounts. If you're new to the program, what ETF battles would you like to see? Hit us up right here on our YouTube comment section or on Twitter, hashtag ETF Battles, and we'll get to it. Helping us to judge today's matchup is none other than Todd Rosenbluth, Head of ETF and Mutual Fund Research at CFRA, and John Davi, Founder and CIO at Astoria Portfolio Advisors. Judges, great to see you again.
Good to be with you, Ron.
Good to be with you guys.
So the four battle categories are cost, diversification, performance, and then we've got a mystery battle category. Now for our mystery category, that's where our judges get to choose one factor or maybe several factors that they feel are important to supporting their analysis. And that mystery category, by the way, could determine which of these two ETFs wins today's battle. So my scorecard is blank. As you can see there, it's ready to go. And so we're going to go through each one of these battle categories one at a time. And our judges will have 30 seconds. We're going to start with Todd. The first battle category is cost. You've got 30 seconds. Go.
So iShares cut the fee for IJR to 6 basis points recently, probably ahead of this battle, just to make sure it was even cheaper than IWM, which is 19 basis points. So a much lower expense ratio for the iShares S&P product, and the volume is still strong. Not as strong as IWM, but enough to offset the cost differential. So we think IJR is easily a much cheaper ETF to consider.
All right, that's a great start. And by the way, good timing with the fee cut on IJR. Thank you for mentioning that. How about you, John? What's your take on cost? Who wins?
I hate agreeing with Todd, but in this case, I think he's right. The one thing I would say is that IWM is one of the most liquid securities in the entire world. It's one of the most actively traded stocks on the NYSE exchange, so it trades like 4 billion a day. So if you were trading at a particular point in time of the day, just be careful because I think IWM is much more liquid. So overall, your total cost of trading and ownership, may not be as much as the expense ratio would indicate between, the 6 bips for IJR or the 19 bips for IWM. So just be mindful if you're trading because IWM is significantly more liquid than IJR.
All right, our next battle category is diversification. Who wins the battle between IJR and IWM? Todd, go ahead.
So this we would consider a tie. I mean, when you're dealing with 600 stocks for IJR or roughly 2,000 stocks for IWM, the Russell 2000, and these are market cap weighted oriented ETFs, you're really well diversified at the small cap level. I think the big thing to be notable is its sector differences. Even though they have a roughly similar in the hundreds and thousands number of stocks, healthcare is a much larger weighting. For IWM, it's 21% of the portfolio, whereas it's only 14% for IJR. So you're getting diversification, but at different sectors, and that's certainly something to be mindful of. But I'm curious to hear what John has to say.
John, you're up next. Diversification, who wins the battle?
So IJR, we like the index methodology much more than IWM. I think IWM is one of the worst indices ever created. All it does every year, it looks at the bottom 2,000 stocks in the Russell 3000 index. So there's no sort of quality filter in it. And then every year, basically, all the best performance stocks leave the Russell 2 to go to the Russell 1. And then all the worst performance stocks in the Russell 1 go down to the Russell 2. So I just think that even though, maybe more diversified because there's a lot more stocks, you're basically every year buying, you're selling your winners and buying the losers. And it's very counterintuitive to my head and how my brain thinks as a capital allocator. I would give my edge to IJR that it's a much more better constructed ETF, which I think is pretty important when you're picking ETFs.
All right. That's excellent analysis. Our next battle category is performance. Who wins the battle? Let's stick with you, John.
IWM year-to-date has outperformed IJR by about 500 basis points, but it has had better 3-year annualized returns. Long-dated, 5-10 years, they're basically even. What we're seeing in the market now is a cyclical upswing. So all the value, the junkiest names are outperforming pretty hard since the March 24th lows. So, IWM, I expect it to trade better and to perform better in the interim. But as I said before, I do like the methodology of IJR a little bit better. There's a quality filter that you have to have in order for you to get added to the index. So I'm still going to stick with IJR just from an ownership perspective, but the edge goes to IWM from short-term performance.
All right. So let's move to Todd. Performance between these two ETFs. What's your take?
Yeah, IWM has certainly been the outperformer. John touched on the year-to-date performance, but on a 1-year and a 3-year basis, which is what we at CFRA are paying attention to, also, IWM is outperforming. So it's hands down. It's been if you looked in the rearview mirror, it's been the right fund to be investing in. I think John is in agreement with us at CFRA. Investors shouldn't just buy the best performer. They should dig deeper than that. But I know we'll get to that in the next quality.
So IWM, IJR, who wins on performance? Tom?
I'm sorry, IWM is the hands down past performer of success.
All right. Well, look at that. You guys agreed on one thing. In how many episodes has it been? So congratulations, guys. You're doing great. So this is the final battle category. It's one of my favorites because we never know what it's going to be that our judges pick. It's the mystery category. And this is the one factor, or maybe several factors, that our judges can pick that they feel are important to this particular battle. So let's stick with you, Todd. The mystery category, what is it and who wins it?
So we consider reward potential as we at CFRA look forward based on the underlying holdings and based on that performance record, what we've seen from that performance. And IJR, it rates higher based on CFRA's rating methodology, looking at the holdings, looking at performance. We think it's positioned to outperform IWM and the broader category of U.S. equity ETFs over the next 9 months.
Okay, very good. Mystery category, let's shift to you, John. Who's your battle winner, and what is your mystery category in this category?
I like fundamentals, and as much as I hate to agree with Todd, I do think that he's right in the sense that IJR is the more intuitive vehicle to use. Basically S&P says you have to have like 4 quarters of net positive earnings in order for you to be included into the index. Whereas the IWM, as I said, there's no sort of filter. It's like the junkiest of the junkiest companies, wind up being added, to the index, and then all the best performing stocks leave. It goes everything against what a portfolio manager thinks about. So, I think that the valuation difference is only, one valuation point between IJR and IWM. IWM is slightly cheaper than IJR. IWM's earnings were derated a lot greater, and you'll see this chart that I have that I'll share with you. But basically, I think you want to go IJR. It's 600 names, higher quality than IWM. And at Astoria Portfolio Advisors, we generally have a quality bias when picking our stocks. So I give the edge to IJR. All
right, very good. And let's now shift to our final overall recap of your battle winner between IWM and IJR. Let's stick with you, John. You've got 30 seconds to go.
Yeah, it's tempting to pick IWM because it's had better performance. It's more liquid. It's one of the most actively traded, stocks in the entire world. But as a capital allocator, I'm thinking about buying stocks that, have higher quality, attributes to it. So even though it's had worse performance and worse, liquidity, I do think it makes more sense to have it in the portfolio. So I'm going to give the overall edge to IJR.
All right, very good. And Todd, this is your final chance to weigh in. Who's your overall battle winner between these two small cap ETFs?
Yeah, IJR, it's the cheaper product. It's the one that has the best reward potential as we at CFRA look forward. The only thing is a knock against it is its historical performance is weaker. That's to be explained, I think, based on what John said. From a quality perspective, we think IJR is the more suitable product for all investors, regardless of whether they're trading a lot or not.
All right, well, that does it for today's ETF battles. And our judges have done an outstanding job providing their analysis. And so we've arrived at the moment of truth. And according to my battle scorecard, today's winner between IJR and IWM is IJR. Again, that's the iShares S&P Small Cap 600 ETF. Again, IJR. And if you're looking for a small cap ETF with exposure, obviously, we're focused on the smallest part of the equity marketplace in the US. This would be definitely a good place to start. And at least what we've given you on today's program is a point of starting point for further research that you can dig in and do a little bit more studying. But I think our judges have given us some excellent analysis, and we appreciate their insight and outlook as always. Before signing off, which ETF battles would you like to see in our next upcoming episodes? Post your comments in our YouTube comment section. Be sure to hashtag ETF battles. You can do the same on our Twitter feed at ETFguide. I'm Ron DeLegge. Thanks for watching ETF Guide TV. And until next time, watch the battle before you invest.